Hi, this is Rony Mullick, and you are watching the Post Market Show. So, close to the week, and we discussed Friday is going to be volatile, and it was bearish as well. We talked about the markets being bearish. The overall European markets were bearish, US markets were uh, on a losing streak, and then our markets have not been spared. So, on a Nifty, if you look at the weekly charts of Nifty, it is clearly down. Let me open up the charts. This is the weekly chart of Nifty, and you can see, let me remove the lines once. Yes, you can see a strong red candle forming in the weekly charts of Nifty, and this is definitely not the ideal closing we were looking for on our weekly chart, because if you look at last week, it was a strong bullish candle, but this week things are looking quite grim, I might say, because market should have broken out already in in this week itself, but this is definitely changing the sentiments. And when we have bullish candles like this, usually people say that 50% of this candle should not be broken, and we can clearly see markets have closed below 50% of last week's candle. So that is again some of the warning signs to watch out for of what might come ahead in the market. So this is Nifty for you, definitely a bearish weekly closing. And let me move to the daily charts. And in the daily charts as well, markets opened with a gap down and is trading at the also trading at the lower point of the range which has made. Now coming to the intraday charts to discuss today's moves. Let me turn back on the lines. Yes, these are the support and resistances we talked about. So markets opened with a almost flat or slight gap down, but then there was a huge sell-off in the first candle. Immediately markets fell, and then it took support around 18650. So we did talk about 18660 as a support, and as you always know, plus minus 10 or 20 points are always there, because supports or resistances, the lines are not exact. So markets took support around that level, took again a moved up significantly in a V-shaped recovery. Again it fell, and ending at the lowest point of the day, just like yesterday. So that is definitely a good sign. For 2 consecutive days, markets closing at almost the lowest point, and markets came and again touched 18660. So that is why I've talked about the importance of 18660 as a support level, and you can see markets took support exactly at that level. And we also did talk about 18660. Once that is broken, we have to short the market, because things were looking bad, but markets were in a range bound, because this is what happens when VIX is pretty low. So this is the situation right now. Markets are kind of weak. Nifty has fallen 0.56% once again, down by 105 points. Coming to Bank Nifty, same thing. Bank Nifty is also weak, but for most of part of the day, Bank Nifty was trading in the green, but it came in into selling pressure as well. You can see opened kind of flat, and then it moved down, but then it shot up around 9:45 10 o'clock, and then it was trading in a range. And we talked about 43,750 as a resistance. So you can see multiple times markets tried to move up, they again came down, again tried to move up, again came down, and finally settled below that level. 43,622 is where Bank Nifty has closed, down by 0.23% or 101 points. So Bank Nifty is also weak, and it is very it is almost close to 900 points away from its all-time high levels. So Bank Nifty is was already weak in this entire week. So let's look at the weekly charts of Bank Nifty and see what we can what kind of picture we can see. So this is the weekly chart, and Bank Nifty, you can see it was continuously closing in the red. This is the week for the last 4 consecutive weeks, and each week it is making lower lows, and lower low is a sign of trend reversal or downtrend. So again, that is definitely not good. And so this is Bank Nifty weekly chart. So you can see again a bearish trend forming here as well. So it is time to be cautious both in Nifty and Bank Nifty, because markets might be making a trend reversal maybe in in the cards in a next few days. So that is there. Interestingly, Nifty mid caps, this is the daily chart. You can see Nifty mid caps also down by 1.24%, consecutive 2 big red candles forming, and this is again a sign of trend reversal, because if you look at the chart, this is the daily charts, you are not seeing any consecutive 2 big red candles but this time it is looking like an exception. Let us move to the weekly charts once and see. Okay, in no weeks after 27th of March did mid caps end in the red, so continuously up. You can see weekly charts. This is the first weekly candle where it has ended in the red. Definitely time to be cautious. Once again, in here, coming to small cap, a very similar story. For the first week after March, this is the first time it is ending in the red. So again, warning signs are everywhere, so we have to be very careful of what kind of expectations we have ahead. So again, on the daily charts as well, 3 consecutive red candles. Again, I think this did not happen before in case of Nifty small caps as well, but definitely a sign of trend reversal. So be very careful of what lies ahead. The sectoral indices, a similar thing, all sectors ending in the red barring for Nifty pharmaceutical sector, which was up 0.15%, but overall things are looking quite bearish. As you can see, all sectors have ended in the red. Today the weakest is what is it? Yeah, the PSU bank sector is the weakest, 1.18% down. Then Nifty energy is down by 1.12%, and Nifty auto is down 1.03%. All sectors have ended in the red, so not getting into specifics. Metals are also down by 2.48%. So it is looking like a all around a sell off. Mid caps, small caps, sectors, everything is being sold, and these are the signs to look out for in case of a trend reversal. And I have been discussing multiple times that we are the risk to reward ratio is on the bearish side right now. FII activities also confirm our bias. 600 crores selling by DII. FII is sold for 344 crores, so net institutional figure is negative. Index movers, most of the heavyweights have ended in the red. I can see Reliance Industries, Infosys, Adani Enterprise, L&T, SBIN. So everything is pretty weak. All large caps except for HDFC. All the heavyweight stocks are in the red. And Adani Enterprise, it is down by 6.8%. And let us move to the charts, because this there was a development that SEC, the Securities and Exchange Commission, that is the the SEBI counterpart in the US, they are looking into Adani Enterprises. So that news have triggered a sell-off in the Adani stocks, and it is down by 6.8%, a big red candle forming. And this is the news update. That is why it is falling. So it's a news-based fall. And State Bank of India, having a large exposure in Adani Enterprises, definitely also came under selling pressure, possibly because of that news. And it is one of the reasons why PSU index fell by that much. Talking about economic calendar, let's see if we have anything important over here. We talked about Japanese inflation. Let me refresh this page once again and see if it is available. So Japanese inflation came at 3.2%. Expectation was 4.1, so that is lower than expected, so that is a good thing. But apart from that, nothing much is there. Next week some data is due. So talking about data, we didn't talk about the Fed Chairman Powell's speech. So he has said that there could be continuous rate hikes going into the future as well. So that is something to watch out for, and US markets are bearish because of that. So now let us move into the US markets, and then we will look into the open interest situation. US markets, this is S&P 500 daily chart. You can see the markets have ended opened with a gap down, and it is trading in the red right now. S&P 500 down by 0.64%, Dow Jones down by 0.56% after a gap down. Nasdaq is on again, it's in red, 1.14% down. US markets are looking bearish once again, but let's see where it closes, because it's a weekly close and weekly closes are important. So we will be watching keenly US markets and how it goes. And talking about global markets, all global markets are weak. We talked about this previously as well, that looking into global markets, there is no chance of our markets moving significantly higher because everyone is down. UK markets down by 0.1%, German markets down by 0.9%, French markets down by 0.3%, and Asian markets are pretty weak. Hong Kong down by 1.7%, Japanese market, which was doing so well, is down by 1.45%. Let us begin look into the weekly charts of Japanese market. You can see a strong red candle, very similar to what Nifty has had in the weekly chart. This is the Japanese candle, Japanese market candle, and China markets down by 1.28%. Korean markets down by 0.9%. So overall, pretty weak is what we are seeing across board. All the global markets are pretty weak. Now coming to the US VIX. US VIX is up today by 1.3%. India VIX, interestingly, is down by 2.7%. Crude oil prices continue to move down, and US oil is right now trading around 68.46. It is very, very close to the lower point of the range, and we know our support is around 66 level. So let's see where the US markets, the US oil goes and trades. Gold should be up. Yes, gold is up today. So after breaking the support, there was no follow-up selling, and it is up today. That is good to say, because when equity markets are falling, gold should act as a contrarian indicator. It should go up, and it is going up. Dollar index is also going up, again an indication of negative trend in the market. So these are confirmations of the negative bias that we have talked about. Coming to open interest, this is Nifty 29th of July, next Thursday's expiry, and things are looking again bearish, as it should, because a lot of calls have been sold today, right, from 18,700 and above. And right now, looking at the overall OI data, we are seeing 18,800 having the highest amount of call build up, followed by 18,700. So a lot of people are selling calls very, very close to the market, because they expect the markets to not break above these levels. And if we'll talk about the largest put build up, I think it is around 18,000. That's very, very far away. Possibly people creating positions early on in the month. But apart from that, 18,500 has some amount of put build up, followed by 18,700. So these are the levels. Definitely put call ratio 0.82, indicating bearishness. Bank Nifty is also same, but intraday today, since Bank Nifty was kind of stable and was in the green for most of the day, people did add some amount of put across 43.5, 43.6 and 43.700. But calls were also written aggressively at 43.700 and 43.800. Overall, looking at the picture, 43.500 and 44,000 are the levels in between which the people are expecting the markets to trade, indicated by highest amount of call and put build up. This is a Bank Nifty put call ratio at 0.85, still below 1, indicating bearishness. So this is also indicating a kind of bearish sentiment in the market. Now talking about Monday, what to expect will depend on the US markets closing. Let's see where US market closes. But looking at the situation, we are getting continuously lower lows, and markets tried 3 times to break 18,887 all-time high, could not. Now it is coming down, and again ending at the lowest point of the day. So going forward, we have to look at the lower supports, which would be acting as important levels. 18,585 is the level I'm looking at. These levels were marked for many months, you know that. So 18,585 first level to watch out for, then 18,458. These are the levels if you are trading intraday. Up above, we cannot rule out the possibility of markets reversing, because anything is possible. So we have to look at resistances as well. 18,780. That is going to be important, and again all-time high levels, which is far off right now. So these are the levels to watch out in case of Nifty. Coming to Bank Nifty, we have to look at 43,470 to 43,300 levels, because that is where the markets made a low a couple of times this week. And let's see how far the Bank Nifty goes, and if it breaks. Once it breaks 43,000, I think the bears will be more confident, and that can start to a strong bearish trend. Up above, 43,750 is acting as a resistance. 44,000 psychological level, keep that in mind. 44,151, these are the levels to watch out for. So this is the overall situation. Definitely looking at the data, world markets, and the developments across different areas, the sectors, everything is looking kind of bearish. Mid caps, small caps also becoming bearish. So it is time to be cautious, and it is most likely people are booking their profits in the investments that they had made, and that is because markets were at all-time high level. So that is causing a panic, and let's see if it is actual trend reversal. So let's wait a couple of days more, possibly the next week, maybe Monday and Tuesday, and then we will have a clear trend, and hopefully we do get a clear trend, because if you have been following the markets, it has been quite a long since we had got a strong trend on either direction. So let's see what it holds for us, and say right now the way it is looking, things are definitely looking bearish. So I have been repeating that the risk to reward ratio is definitely on the bearish side right now, and that view continues to hold. So that is all from my side. Hope you have a good weekend, and we will catch up again on Monday. So thank you for watching, and have a very good night.